Hello, hello, hello. Mic test, mic test. Hello, guys. I hope you are well and you can hear me clear and see the screen here. So we are going live here for the 29th Trading Opportunities webinar. My name is Nirav Yadav, and before we move any further, let me just finish up with the setup here. By the way, if you guys have joined in, do let me know by typing in hi or something in the comment section. Good evening, Madhavji. Hello, Antoine. Hi, Anna. Hello, Steve. Hi, Marcelo. So it looks like audio and screen share is working fine. Can somebody just type in a quick yes? Thank you, Marcelo, Madhavji, and Steve and Anna. Okay, in that case, let me just quickly get started off here with the quick introduction and everything. Thank you, Antoine. Where is that? So before we start with the webinar and how we proceed with things, let me just get done with the legalities here. So here's the quick disclaimer suggesting that all content presented here is purely for educational purposes. I'm not soliciting buy or sell. If you do want to use the views presented here for your trading, investing, or any other purpose, you yourselves will be liable for your risk, profit, loss, or any other situation that might arise from you using these views presented in the webinar. Right, and rest of the stuff you can just read yourselves. It's over here on the screen. So with the legalities out of the way, let me just get started with the introduction, and after that we will go with the actual webinar. So as you can see over here, this is my website 50eyes.com. I am the admin and owner of this website. I have been sharing my views on the markets, including stocks, commodities, cryptos, Forex for more than 7 years now, right? And all those years, whatever analysis I've done publicly, I have kept a track record of it over here, which is the page called 50eyes.com/forecast-accuracy. If you scroll down to this page, you will find that we have reports starting from the 2016 year, right, to 83.34, 2017 87.5, and 2018 84.6, so on and so forth. As I go up, you can see 2019 is 84.88, 2020 is 88.52, and 2021 is 82.22. What I'm showing here is that these were the dates when we did the webinar or the video was uploaded. These were the instruments discussed. This was the view I presented, and did it work or did it not work is written here. All the things that did work are given a +1, that things that didn't work are given a -1. And based on that, we have calculated out the accuracy. So out of 45 things we discussed, 37 worked out, right? So why I'm showing this is because for 6 years, this has remained, my accuracy has remained higher than 80%, which beats all industry standards. Generally, even 60% is considered very high in this business, right? So with that out of the way, this, by the way, basically is a demonstration to show the level of my expertise, which is Elliott Wave, an advanced form of price action, or I must say the most advanced form of price action, right? So with my expertise shown off here, let me just get ahead with the webinar here. So this is 29th webinar in the series of these trading opportunities webinars that I'm conducting, and we conduct 3 of these: Monday, Wednesday, and Friday, right? Timing is always 2 p.m. GMT. right? So you can join in live. This is broadcasted live on my YouTube channel, which is 50 Eyes Market Analysis, as you can see over here, right? And lastly, I'm also the author of the book Think with the Markets: Secrets to Achieve 80% plus accuracy using Elliott Wave, which is available for instant access via Amazon's Kindle platform. So you can electronically get the copy for it if you are interested in learning more about my work. Other than that, I have my courses and personal classes, etc., etc. You can check it on my website over here, right? So that's about it for introduction. Let's head over to the actual chart analysis. I'll wait for a few seconds for somebody to confirm for one last time if the audio is working fine. Just anybody from the audience can confirm with a quick yes again, and then we'll start with the actual stuff here. And by the way, for those of you who are joining in for the first time, let me just quickly give you a quick outlook of how we proceed with these webinars. So here is the last one. By the way, 28 trades have played out of the last 27 webinars which we did. So this beats an average of one, that is a little bit higher than one. And I'm talking about all major moves here, not some minor movements, only the big moves. There were a lot of minor movements which we caught in the middle. So getting back to the webinar, we will proceed with Euro USD followed by EURCAD, USDJPY, EURJPY, crude oil, gold, S&P 500, Nifty 50, Bitcoin. That is the way we proceed with these webinars. Every time I discuss an instrument, I will ask you guys after the completion of the discussion if you have any doubts. At that point, you can just type it in the comment section and I'll take your doubts from there if any. Thank you, Madhavji. Thank you, Rod and Philippe and Mark. So let's get ahead with our discussion. So as you can see over here on screen, we have the chart of Euro USD. Last time when we discussed, or last time, basically just to give you a quick summary of how things are proceeding over here. We were able to catch this turning point, right? And since then, we presented two targets. The one was the target minimum, which was 1.0768. This one. Second was this target, which is around 1.0946. So these were the two targets which we discussed, and more or less our strategy has been to trail existing longs until our target 2. So far no update, and still no update here. It is still doing as expected, and just keep trailing your longs. No new entries here, and basically the analysis also remains the same, but I'll just quickly summarize for those of you who are joining in for the first time or did not follow the last webinar. This is our point of reference around 0.95346. From here we have the first leg up, second leg down, third leg up, fourth leg down, and fifth is under progression as per our understanding. And what I'm typing here is the basic Elliott Wave impulse pattern, which if you see on the right hand side should look something like this. So it basically suggests that the first leg up will be followed by a wave 2, which is in the opposite direction to the trend, that would be downward direction in our case, followed by the third up, fourth down, and fifth up. So that's basically what's being followed here, right? And apart from the targets which I mentioned here, I have also mentioned that in case the market becomes really bullish, what we can do is we can look out for another target, which is the high of this channel, right? So the high of this channel trend line, the upper trend line, basically will also suggest a possible upside target in case the market becomes extremely bullish. So that's another point to note here. So let me know, guys, if there's any doubt. There's not much to add here on this chart. We'll move to EURCAD. If you are clear, do type in understood or clear in the comment section so that I know everybody is on the same page. Philip is saying, hi, today is 1.0926, not far from your target. Yes, it is more or less achieved. Practically speaking, we don't really wait till the last highs. So you can say the target is basically achieved, and 80 to 70% of the position should be closed theoretically, right? So, but then again, these kind of things mostly depend on what you were able to take the first entry as. If your entry was very late, then you might have to do things differently. Thank you for the confirmation, Philippe, Steve, and let's move ahead with our next chart, EUROCAD. So EURCAD, guys, if you are not following from the past few webinars, I'll just quickly mention we were able to catch this leg down. This was our target one. Then again, we were able to catch the DAG down from here. The break of this orange channel around the price of 1.44569, and it again achieved our target 2. By the way, target 2 was presented after the market broke the first low. The first time it broke the channel line. So it has worked out 2 trades for us. And if you have been following me, I was not much interested in this counter, even though 2 trades have been given, because it has remained sort of too sideways for my taste. Or basically, there were better opportunities elsewhere. Anyways, coming back to the actual discussion, it has. There was another trade setup which we discussed, which was that if the market takes out the high or goes near the high, then it could initiate longs, right? And the idea was simple enough. Either it will go straight up from here, which it does not seem to have done so far. Second idea was that it can go back again within the price range, again within the sideways range of this box or rectangle, and then go again back down and go sideways and do some things before taking off. Right. So that's why again I was not interested in this. Swing wise, it is a long. That is, if you enter longs here, only take partial entries. Like if you were going to enter with, let's say 3 lots, then only enter with the 1 lot here. And if it pulls back down again, then enter the second lot here. And then when it breaks the high, then enter the third lot here. And that would be the strategy which we should use on EURCAD. So swing perspective wise, it is long, and immediate longs I don't think is a very good idea. But I'm just discussing the way to trade it if you are interested in trading it. I'm personally not very interested in trading EURCAD right now. As I said, more clear opportunities are visible at other places. But yes, that's the trade setup for it. So let me just quickly know, guys, if there's anything else on any doubt or anything. If not, just type in understood or something in the comment section. We'll move on to USDJPY followed by EUROJPY. S&P is forming some important formations, so we'll have a look at that in more detail. Still waiting for the confirmation in the comment section. Okay, thank you for the confirmation, Madhavji. Philippe, let's head over to our next chart, which is a chart of USDJPY. There it is. So USDJPY, as I mentioned last time, we were interested in looking for some short possibilities on this counter, right? And our idea was that it was possibly forming a diagonal formation from this point of reference, which was around the price level of 134.805. Right, we were expecting that it was forming something like this. So basically, the first leg down will be called the wave 1 down, the second leg up is 2, third leg, an interesting thing or important thing is that the fourth leg overlaps the price action of the first. Right, if it does that, we call it a expanding diagonal, and you can then in that case draw trend lines that will expand. Now the thing is that I am not very interested in it now, because although the invalidation level is up at 131.503, I personally do not like this thing crossing the trend line, right? So practically speaking, this is a minor breach and it can reverse still. But at this point, I would better close this short and re-enter later. So if you are in shorts, if I'm in, I'll just say it from my perspective, otherwise it sounds like a trading advice. So personally closed and exited shorts here. We'll look to re-enter later if the opportunity exists. But I think we will need to update this count and it might very well be doing something else. Right. So just leave it if you were in shorts for now. So that's USDJPY, probably one of our losses after a long time. I don't recall mentioning a trade being closed in loss since I've started these webinars. Maybe I forgot, but this definitely is one of the losers. So that's our take on USDJPY. I don't have anything to add here, and I can discuss the bullish implications of it. But I would very much like for it to first close the invalidation line and show some price action, which has some strength before jumping on the other side of the trend. So that's my take over here. Let me know, guys, if there is anything to discuss further. If you have any doubts. Hello, Charles. Top of the day to you as well. Thank you, Steve, for the confirmation here. All right, let's head over to our next chart, EURJPY. Thank you, Manaji, for the confirmation. So EURJPY is sort of following with the USD counterpart. So, but this one we were well prepared. 130% trading above. Let me see what Philip is saying. Okay, 178.2 and 130.64 trading above. Yes, we can check the levels, but as I said, the pattern does not look very pleasing. And if you go with the Elliott's original work, his first book, Nature's Law, Secret of the Universe, he goes with an analogy called guideline of right look. So basically, what he says in that is that if some pattern, if there is a pattern which you think is forming, but it just doesn't look right, doesn't look the way it's supposed to, then it most likely is wrong. So that's not following the guideline of right look. So I don't think this is forming the diagonal. And if it's not forming the diagonal, we don't really have a clear sell setup, right? That's why we are looking for exiting this one. So anyways, that's enough discussion on that. Let's head over to EURJPY now. So EURJPY, currently we are looking at, as I said, something similar to what we saw on USDJPY, which is upside movement. However, as I said earlier, we are better prepared on this counter. For the first time when it showed this reversal, I was very clear and I mentioned that it could just do something like this. A, B down and then C up. That is, it could still go higher before turning and hitting our target. So on this counter, we knew the possibilities. On USDJPY, we were caught a little bit off guard, I have to say that. But anywho, the thing is that EURJPY is exactly doing the second possibility, which we discussed long ago. It seems to be forming extended, not extended really. Actually, you know, I'll have to adjust one thing here. Okay, so what I was saying was that let me just remove the counts. That this market might be doing either this one down, A up, B down, and then C up, right? So this C up will basically take out the last high, and we already have the target zone for it. We have the target zone around 144.18 to what is this 142.92. So basically, we are expecting that the market might stop within this zone, right? This is the exact thing which seems to be happening. So that's about it for the first possibility. Second possibility is that the one is already complete here, and this is the two, and this is the another one of a lower degree, let's say dot one, and then this is the dot two, in which case it should not cross the last high, right? So this is the clear distinction here. If it's forming a nested 1-2, then it should not cross the last high. But other than that, this does not really add much to our analysis or is not of much benefit to us, right? So basically, EURJPY is wait and watch, right? And as I discussed earlier as well, once again, that we were already well aware of this possibility where it could do something weird about our entries, like it could go reverse and back above the last recent high. So I hope you were better prepared for it and you had taken your positions accordingly, right? I don't think there is anything else here. If you have any doubts, do let me know in the comment section. Oh, actually, I should just remove it there. If not, just please let me know if you have understood everything by typing in clear or understood. Yes, we will check the indices. We will check S&P's 500 basically. But we always have a routine. We do things in a sequence and we will have to follow that sequence. So S&P will come after crude, gold. So 2 charts you have to wait. Okay, Philippe, Steve, and Jill, thank you for the clarification. Let's head over to our next chart, which is crude oil. So crude oil, when we discussed last time, we were of the view that this market is possibly heading higher for the wave C, right? Our count basically starts from this point of reference around 76.46 point of reference. And we have an expectation that or our count is just like this. Which if there was alternate view here as well. Yeah, so our count was like A up, B down, and C up. Expectation is C is possibly forming a diagonal structure, and if it's forming a diagonal structure, then I have already drawn it. Let me see what. Yeah, so this is our first up, second down, third up, fourth down, and fifth up. So that's the expected scenario on crude oil, right? So there is really nothing to add here other than the fact, just a reminder that we think that there's a resistance coming around at 84.84 and 82.179. So from the current price level to 84.84, we expect that the market may start to slow down and the diagonal structure might even get completed somewhere near that region. So that's basically it for crude oil. There really is nothing new happening. It's more or less remained within the past price action range so far. There is another possibility of the triangle scenario. I think I discussed it the last time, but that does not change anything again. That still suggests some upside. So I won't discuss it again here. All right. So I don't think there is anything to add, but if there was any doubt, you can just type it in. But I'll just load over the chart of gold because I believe all the audience here is following me for the past webinars and they already know what we discussed. Okay, so right here on screen, you can see the chart of gold, right? And in this chart, I'm just loading up the past data as well because I want to show you some quick things here. And this is for, again, people who are not following me for the past webinars, right? So I just wanted to quickly point out we were able to capture parts of this up leg. This up leg we were able to capture, and this last leg, not last leg, this last leg of wave dot one we were able to capture till here. So this, and then we were able to again capture parts of this up move, and then this down leg and this up leg. So long story short, we were able to capture a lot of up moves. I can just simply point out the ones I remember off the top of my mind. I think 2 opportunities here, one here, one here, and one here, and 2 here. Down and up, both we were able to capture. I think there were 3 here, by the way, not 2. So that itself means 8 opportunities in gold we have been able to capture in the past 28 webinars. All were long. I think one was short, sorry, not all were long. This one was a short and then long. And there were maybe some other intermediate shorts, but these 8 I remember at the top of my head. If somebody has been following these webinars, which are by the way available for public to view, they should have been able to take at least something out of these trades. There were so many discussed and all of them worked. Gold literally has performed our analysis so well. Whatever I push on the charts, it just works out. Right. So this was just a quick reminder for those of you who are not joining in these webinars live. Do make sure you attend them when they are first broadcasted so that whenever the opportunity arises, you are the first one to catch it. Some trades just end completed right after our discussion in the public webinar as well. So that's another reason to consider joining in live. And before I move ahead with the current analysis, guys, hit the like button on YouTube or whichever respective platforms you are on. And once the webinars are complete, as I always request you guys, please share it with 3 of your contacts or 3 of your groups. If you have trading groups like on Slack or what do you call WhatsApp or whatever, guys, you are using, that just share it with your group there. Or if you don't have something like this, just retweet my Twitter posts whenever I post. I generally post after 20 minutes or 30 minutes of the webinar completion. Just retweet my tweet and share it on Facebook with the social tags or whatnot. The reason I ask you guys to share it with 3 people is that that exponentially increases our reach. If everybody does 333, then it will go to a very big number. And I have been seeing some good growth on the YouTube channel as well. Very recently, we were able to cross 9,800 mark. As you can see, the first time the channel has crossed 9,800 yesterday only, right? So it is working, and the view counts are also increasing. So I'm very thankful for you guys for doing your part and sharing my work. Just continue doing that, guys. So let's get ahead with the gold discussion. So what we can see over here is one possibility I did not consider in the last webinar was that the wave 4 may very well be continuing. We just discussed that wave 4 is a triangle and then it will go up. By the way, this was one of the trades we discussed and it worked out. That wave 4 was a triangle and it will go up. So that makes it 9. Our tally of trades on crude gold to 9. So it did go up. And now the thing is that it can still be continuing for the wave 4. Now the way it will work out is that this will be the 1, this will be the 2. Right? And we have the 1, 2, 3, 4, 5. Let me see, 1, 2, 3, 4, 5. Yeah, so if we take this as 3, by the way, I have some doubts about taking this as 3. There might be a recount or a updation of it, but it doesn't really affect our current analysis. So the way is that either the 4 is complete here as a triangle and the 5th is done. But the second view I have is that it is continuing as a flat and then it will head over for the 5th. Right? So this is the secondary view which we should have discussed in the last webinar itself. Right? And if this view is the one being followed, then there is a few things which we should know. Firstly, we expect the market to generally reverse around either 23.6 or 38.2. Let me just quickly draw that on the chart. Okay, so we generally expect the market to either reverse with the wave 4 complete either here or here, right? So it has not yet done any of that. And do keep in mind, it's just a guideline. It may very well not do any of that stuff which I said. So I'll just answer a question after I've discussed this thing, Philip, or maybe it will be discussed within this thing. Just hold off till I discuss the whole thing, and then I always take the doubts. So no need to hurry, right? Just typing in questions in the middle sometimes breaks the flow. That's what I'm saying. So anyways, heading back to our discussion, as I said, either the 4 will reverse from here, or maybe even before this, right? But the main theme is that it still has upside remaining. So with that in mind, we can do one simple thing. We just don't have to care about what's the wave 4 doing. That's one way of doing things. We can just push an alert of greater than. And if the market really does cross over, 1 second. I just wanted to adjust it. Yeah. So if the market does cross this alert line, which is currently around, roughly speaking, 1928 something, then I will be interested in adding longs here, right? So that's just one way of looking at it. Second is that if it really goes to the 23.6 line, then I want to know. So I'm adding alert near 23.6 of less than. So if it goes near one of the probable reversal regions, 23.6, as I said, is coming around 1904.59 and 38.2 is 1889.49. So if it goes near any of these regions, I will again know, right? So the setup remains long, and either something like this will happen or it can also go up straight. So these are the two outlooks on gold. Swing perspective long, short term wise, a little bit of a wait and watch here. I do think it has some more downside remaining from what it looks like. 3, 4, 5. It could also be forming a from this point, possible diagonal here, which can take it to 23.6. Let's see. That's one of the likely possibilities. Anyways, coming back to the question I had from Philippe, what is your invalidation level to turn lower? So right now, because the trend is so strong and it has worked out so well, I wouldn't be interested in selling this market unless it's intraday. That's another thing. Selling it for swing, currently I'm not interested, but if the market goes below the wave 3 low, circle wave 3 low degree 1, basically price wise speaking, if it goes below 1880, then I will be alarmed, and this will give rise to some possibilities on the downside, right? So below 1880, I might have to consider, I will have to, not might, I will have to consider bearish possibilities here. And the point also will be considered that maybe the whole up leg may have completed. But until it does that, there is no real reason for worry here. So that was my take on gold, guys. Let me know if you have any doubts, and then we will head on to the S&P's discussion, followed by Nifty 50 and then BTC. So maybe there's a delay here. I'm waiting for the confirmation in the comments. I think this time the YouTube delay has gone a little more than expected. All right, Philippe, Jill, and Steve for the confirmation. So let's head over to the S&P's 500 chart. So last time when we discussed it, let me show you what the count was. So we were thinking that from this point of reference, so we were thinking that from this point of reference marked over here by the rectangle, around 36, 37, we had an expectation that this was a possible A up, B down, C up, and D down for a triangle, right? Now, for a triangle to be heading, or for a triangle to be continuing, we really need to see this leg go lower, right? We really need to see it go lower than the level of 3762, and possibly and most likely much lower, right? So currently what objection I'm seeing over here is that this market is sort of trying to give some bullish signs. There is no confirmation yet, right? But it is very simple at this point in time. It if it grows above the last high, which is basically around 4010 something level, you can just check it at your own chart if you are using a different data feed. So on the current chart, it is around 4016 something, right? So above that high, it really becomes a low probability scenario, the bearish scenario, I mean. So if it crosses that high, then it can practically and theoretically still be forming a triangle. But as I said, the triangle possibility then gets reduced down a lot, because generally you don't see, I mean, you do see complex formations in wave D, but generally speaking, in this particular case, it has already sort of done the bare minimum A, B, and C. So it going higher up again, it sort of raises questions. So S&P, the take basically is that if it takes out our last high, then we will start considering bullish possibilities with more seriousness, right? Until it doesn't do that, the bearish count is still valid, and basically it's still valid, right? And let me just check out the short-term structure here. Sorry about that. So let me just check out the short-term structure here. Short-term wise, let's head over to a lower time frame, right? Yeah, so short-term wise, it does look like from this point we have a one up, a two down, and this looks like a 1, 2, 3, 4, 5. Let me see again one more thing quickly. Then it becomes a 1, a 2, and 1, 2, 3, 4, 5, or 3 down, 4, 4, 4, 5. Yes, does look like a wave 3. So yes, it can still be a correction heading higher in A up, B down, and C up, which may soon become complete, right? And as I said, if it takes out the high, the last high, then it will be a possibility of new upside, right? So S&P basically is wait and watch because it's at sort of at a crucial level. Taking out here would mean some long-term count change implications here, right? And for the BD side, the play remains more or less the same. We wait for this market to give a deep dive. I personally don't want to sell it again unless it really is showing some strong signs of bearishness. Let's say it goes near the past congestion around 39.16, 39.17 something. Then I'll be interested in selling. FX data feed, FX data provider here. So let me know, guys, if there is any doubt here. And personally, I think I've discussed it in as much detail as possible. By the way, the last webinar when we discussed the S&P chart, I think last or last to last, we had given a whole long-term analysis. So if somebody is looking for a detailed outlook of the complete longer-term picture, that then they should check it out. And those of you still new here, you can just head over to my YouTube channel and click on the live section here. And in the live section, you will find all the past webinars 29, 28, 27, 26. I mean, you can just scroll down and the past webinar series of applied Elliott Wave webinars, which were the monthly series, also here. So, anyways, that's my take on S&P's 500. Right. Next chart, which we'll be discussing, is Nifty 50, which will be followed by BTC. Okay. Okay, Philippe and Jill, thank you for the confirmation. Let's head over to the next chart of Nifty 50 here. By the way, the more I look at this chart, the more I feel like it is going to go to the upside. Anyways, and I could do some also cross-referencing with DEX, but let's leave it for the next webinar. Okay, so Nifty 50 is sort of following the lead with the S&P 500, right? We had two counts running here. Basically, not really two counts. The main theme we have is either the correction is complete here, right? And if not, then this wave X is continuing as a possible triangle. So here it becomes more or less similar with the S&P count. Right. And once the triangle is complete, we should see the lower leg. Now the thing is that as I said with the S&P count also, we are waiting for the invalidation of the bearish thing or the bearish count basically, and similar goes the case with Nifty. The same will come at the break of the high of 18,182. Actually, it will come at the high of a break of the high of 18,246 or 250, let's say. But I think even the break of the last high itself is quite enough, of 18186 is quite enough. So we don't really have to wait for the technical level of 18260, which is actually the level. So that's why you see I have placed an alert at 18187. So above that, it would most likely suggest, or there's a heavy possibility then that the bearish count is not playing out and that this market is now is playing a bullish count. So that's our take on Nifty 50. Basically wait for confirmation on the upside, and short term view is still valid, right? But more or less we look for guidance from the S&P. So very short and quick discussion on Nifty, not much to add here. Before we move over to our next chart, BTC, I'd like to quickly again request you guys to hit the like button on YouTube or whatever respective platforms you are on. And once this webinar is complete, I always share the link in the Twitter feed as well as Facebook, right? So once this webinar is complete, I would request you guys share it with 3 of your trading groups or circles or people who might find this of use, right? So basically, let me check the comments here. 10253 is Nifty future. Yeah, but we are discussing Nifty on the index, that is the cash, you can say, Madhavji. So Nifty future, let me just quickly check. Yeah, so futures similarly is having, let me see. Yep, futures also we can say that we have the A here and the B here, C possibly here, D here and E here. So generally they like almost always they have the similar count. Here the high becomes more relevant. On the future 18330 is more relevant compared to the lower level 18220. There's also the fact that this time expiry is coming on Wednesday instead of Thursday. So anyways, that was our discussion on Nifty 50. I have discussed the whole strategy. Let's head over to our next chart of BTC. Hari is asking how come USD INR is coming down but cash inflow. Well, I am not going to discuss these things. I'm not really an expert on global macroeconomics. That's not what I do. I just speculate based on price action. But as far as USD INR is concerned, I think it is forming a possible flat formation. Right? Other things are also possible, like if the high is here, then we can always count it as a sector heading to the downside as an impulse followed by 2 and then followed by a new leg lower. Right? So both counts are possible here, but the minimum possibility is that at least it is in a box range if it's a flat, because flats have the tendency to go sideways before the leg up. So USD INR is at least sideways, not bullish or bearish, sideways actually for now. So yeah, let's head over to Bitcoin, and that will be our last chart for this discussion. Bitcoin, last time when we discussed, overview was that if the market sees a reversal here, which was within the range of 21,560 something to 20,398, then it should be heading down for the wave D of the expected triangle pattern. And the other view, or the bullish view, was that if the market closes about 23,200 with some certainty or basically strength is what I'm trying to say here, then we will have to switch or consider at least the bullish possibilities. So right now the market is precisely stopping at 23,200, which is basically at least confirming our bias. It is basically at least the market is telling us that yes, this level, which we discussed as an important level, is at least of some value to the market, right? Further on, as I said, it has not created a base above 23,200. So I'll just actually wait for it to create that base. If it does create that base above 23,200, then we will have to most likely relegate our triangle count, and we will have to consider that this is our short-term base, and the whole movement from here up could then be considered then as a impulse heading in the upward direction, right? So that will be our quick update or minor update. This will be a wave 1, this will be a wave 2, this will be your wave 3, there will be a wave 4 here, and then the 5th. I mean, I can just do it right now. I'm just actually waiting for the confirmation, but we can actually go ahead and do it as an alternate count on orange color. So if this market is heading up from here, then this is the alternate count we will be following. There's a possibility here that 3 is either here or here. So guys, let me know if there is any doubts on Bitcoin. Basically, there is not much to add here. That's our main theme if it's really establishing itself above 2300, right? And as such, this channel does not make much of a sense. Okay, I don't see any doubts here. I'm not even sure how many of you guys actually follow this instrument. It goes outside of the normal markets. But anyways, guys, I'll just wait for a few seconds. If there's anything, you can just type it in. If not, just let me know how was your view on this webinar. Will you be sharing it? Definitely, I would like to know that. By the way, how many of you guys are actually able to share it with 3 of your groups? That would be nice to know. And yeah, one thing, number of trades which worked out were 28 in the last webinar. We got 1 on gold, so that makes it 29. And EURUSD is still in the works, so we will not count that. We'll leave it for the next one or something like that. So far 29 trades, including the one which we added today for gold, have worked out in the last 28 webinars, which is, in my understanding, an extremely good number. Okay guys, with that I'll just sign off now, and I'll see you guys in the next webinar.